your aerial perspective on stock market developments and of developers of the Zimbabwean economy. Thank you for joining us as we broadcast live from Hampton Studios. I'm Ibn Mabunda. Let's get to business. The International Monetary Fund has issued a global economic outlook report with a global growth forecast of 3.2% in 2019. Picking up to 3.5% in 2020. In Sub-Saharan Africa, growth is expected at 3.4% in 2019 and 3.6% in 2020. This is a 0.1 percentage point lower for both years than in the April World Economic Outlook. For Africa, oil prices have supported the outlook for Angola, Nigeria, as well as other oil exporting countries in the region. But growth in South Africa is expected to be at a subdued pace in 2019 than projected in the April World Economic Forum. Notably, the International Monetary Fund in the month of April projected a GDP decline for Zimbabwe of 5.2% while anticipating inflation to close at 40%. Things are expected to be tighter in the Zimbabwean economy over the next 3 years. This is according to a statement issued by the Foreign Affairs Minister, Honorable S.B. MOYO. He said during a parliamentary committee hearing yesterday, which was attended by various parliamentarians. Beyond our borders, Kenya launches Africa's largest power plant at a cost of over $750 million. Speaking at the launch of that particular plant, President of Kenya, President Uhuru Kenyatta, said that the plant will feed 310 megawatts of power into the Kenyan national grid. This is expected to increase Kenya's power supplies by a good 13%. Beyond the continent, Boris Johnson is set to take over as the Prime Minister of the United Kingdom. He takes over from Theresa May, who had to exit office following a failure to deliver on the Brexit plans. And now this is said to have cost the UK economy from growing by a good $60 billion. And now Boris Johnson, with his radical approach, is expected to come on a radical tip which could cost the Britain even further. This concludes our evening news bulletin. Up next is a look at the news in News Review. Don't go anywhere.
Climbing to the top takes more than just hard work and smart choices. It's the passion that from within. That's what we strive for at CBZ. We're a diversified and innovative listed financial services group in Zimbabwe with a complete range of activities including banking, short and long-term insurance, asset management and property investments. CBZ has been a pinnacle for stability in the economic landscape of Zimbabwe, stemming from our deep-rooted values, our excellent customer service delivery and our corporate vision to strive for excellence as a global competitor. Our continuous investment in research and development will cement our promise to provide customer convenience utilizing state-of-the-art technology. Relationships are at the core of what we do. We understand, however, that strong, long-lasting partnerships are not built overnight. With over 3 decades of wealth management, we have come to understand our clients and their specific investment requirements. Our unique mix of skills ensures that investment opportunities are examined from all perspectives. The balancing rocks of Zimbabwe have weathered the elements for thousands of years and stood the test of time, like majestic reminders of the fine balance of nature. They challenge our perception of what is possible and what endures. Just as CBZ has weathered the economic storms and remained steadfast throughout the turbulence of unsettled economies. Achieving the impossible through resilience and stability, we balance the elements of hard work, dedication and experience, making us your ideal partner for success.
Welcome back, viewers. It's now time for News Review. Now, just before we get into our discussion, just in Delta Lager, volumes are down 57% in the 3 months to June, which is the quarter one of their 2020 financial year. Revenue scaling 97% driven by consolidation of HARDSHIPS as well as a review in the pricing in the face of inflation. Now, of course, just to look at the historical performance in terms of how they have performed of late, the stats there would show us that they've actually moved in an upward trajectory where their revenues and their figures are concerned. A bit of a glitch there with the graphs, but we'll progress nonetheless. Now, to discuss these and other issues, I'm joined on set by our very own economist, Tinashe Kadu. Tinashe, good evening and welcome to the show.
Thank you, Eben. How are you today?
Splendid. Can't complain. Should only get better yourself.
I'm very well.
Beautiful. Now, of course, this would be the graph of how Delta has performed over the past few years, moving from the full year of 2015 right up until full year of 2019. Revenue there of $577 million in 2015 against a profit after tax of $92 million. 2016 revenue dipping there right up until 2017, and then from 2017 they report a jump from $483 million right up until $722 million. Profit after tax seemingly moving in similar pattern, dipping right up until 2017 and then scaling from 2017 right up until $143 million in the year 2019. That jump there being the result of an increase in aggregate demand, as there was a lot of money supply that fed into what we saw play out in the economy, as several matrices actually moved in an upward position. But now over to you, Tinashe. What is your comment where the performance of Delta is concerned?
If you look even in terms of its full year 2019 performance, Delta's performance that year was actually driven by a bit of subsidies from the government. When I say subsidies from the government, if you look at what transpired in 2018, especially in the later part of 2018, that's when we started to see the disparity between your RTGS balances or your electronic balances and your US dollar balances. So to consumers there, they were seeing alcohol a bit cheaper there, so that demand actually was driven because of that a lot of disposable income during that time. But if you look at now, if you could take into consideration now the shift in terms of the monetary landscape, we have seen that when the authorities actually separated the accounts in October 2018, when they officially separated your FCA nostro accounts from your RTGS dollar accounts. That's when we started to see a structural shift in the monetary space. Then from that period there, we are now seeing consumers shifting in terms of their consumption pattern. They are now moving away from your lager consumption to those value alcoholic beverages. When I say value alcoholic beverages to someone who is actually into food and drink, those value alcoholic beverages are your beverages that will take you faster and you spend less. So these are more of those products of that subsidiary of Delta, which is your HARDSHIPS products. Those spirits and other whiskies, those are now such kind of alcoholic beverages that the consumers now are consuming much more rather than your lagers and your sorghum beers. So if you see now in terms of its first quarter performance, Delta is actually a much reporting period or a March year-end period. So when we are saying its first quarter, we are now actually we are implying the period from March to June. So if you look at the period from the March to June, it's actually a period where there are some shifts in the economy. The shifts and shocks in the economy emanating much more to do with the monetary interventions that were actually pronounced by the government, some to do with your SI 142, your high inflation, and all other regulations. So if you look at all those things, they had an impact in terms of actually monitoring or trying to change or to shift consumer spending pattern. So that's why it's no surprise to see Delta actually experiencing a huge 57% drop in volumes in that period when compared to same period last year.
Is this perhaps what of course this is Delta, one of the heavy chips that we actually have on the ZSE. Does this reflect what we have seen? Does this reflect what we'll perhaps see across the market? I mean, it's been high inflation, it's been a period characterized by currency issues, policy adjustments, and there's of course not forgetting the power cuts that we've actually seen play out and grip economic progress.
If you look at what's happening in the economy, I would say we are in a period of what we call economic stagnation, or I can just say stagflation, which is actually a period of high inflation and receding economic growth. So when you have got a receding economic growth, it means on the balance you are realizing a fall, or you are experiencing a fall or a dip in your real disposable income. So when your real disposable income is falling, as a rational consumer, you would now tend to spend on things that are near basics, or that you call basics. So we are seeing in an economy where consumption now is tending towards those things that are considered your basics rather than your luxury. So those things that would be considered as a luxury, we tend to see consumers maybe trying to substitute them with other items that are comparable in terms of value, as well as in terms of the satisfaction, or in economic terms, what I can say, utility that you get from it. So what we are seeing in terms of Delta's performance, I did comment on revenue, but I think revenue actually scaled up 97%
of course.
Year on year. The jump in revenue is actually driven by the consolidation of African distillers financials into Delta's financials. AFDIS is actually an associate or a sister company of Delta, and Delta in most of its times it reports AFDIS's results in its results. So you see, consumers now, because of that falling disposable income, they are now looking at those value items, which is your whiskeys and your spirits that will take you quickly, rather than concentrating much on your lagers. So this is actually a change in terms of the consumption pattern of our consumers. Then if you look at the sparkling beverages, which is your Coca-Cola and your soft drinks, that business actually underperformed over the past couple of months, owing to shortages of key inputs. As a result of that, the continued foreign currency shortages. Actually, Delta had to shut down some of its plants that produces sparkling beverages. Then we have seen also the entrance or the penetration in the market of another giant in the form of Pepsi. So we are seeing Delta losing market share in terms of that space, and we are also seeing its price actually on the high end when you compare it to the lookalike or the like competition which is coming from Pepsi. So I'm actually not seeing Delta trying to get back in the space that it had, or to have the lion's share that it had in the previous years. So I'm seeing it's a sparkling beverages side of business continue to struggle, or maybe continue to find less traction in terms of its dominance in the market.
Okay. A bit of some worrying figures that there's actually been depressed demand as well as depressed consumption. Now the Minister of Foreign Affairs says Zimbabwe needs to brace itself for a good 3 years of difficulty.
You see, this is what happens when you implement austerity measures, especially when you implement those that targets your demand rather than those that control the supply side of economics. When you implement those austerity measures that targets demand, these are measures, those like your 2% taxes, your freeze in terms of government employment, your freeze in terms of salary increases. We have seen, the government actually being hesitant to increase, salaries for civil servants. It's actually, trying to to intervene in a way that trying to provide those once-off, like your $400 cushioning, which is actually once-off, which is not recurring. This is actually something that is actually worrying. You look at Greece as an example. When it implemented some of its austerity measures back then, its GDP actually dipped, but unfortunately, unlike us, it didn't end up into a recession. If you look at Zimbabwe, we are now technically into a recession. Then we also have high inflation. In economics, when you have got a recession, you have to implement expansionary policies. But when you have got an inflation, high inflation, you also have to implement contractionary policies. So we are actually in a space where whatever intervention that would want to implement might be contradicting with what happening in the economy. So it's a situation that is actually scary, and I think the Foreign Affairs Minister is actually spot on to say that we would have at least 3 years of continued hardships. Continued hardships in what sense? Continued hardships in the form of having to be contained with depressed salaries, with falling disposable income, with inflation, which is actually rising. I don't see authorities trying to rein inflation anytime soon. We would also have to contend with falling per capita income as we measure it by GDP. We are technically in a recession. IMF is projecting a negative 5.2% economic growth this year. As Equity Axis, we are projecting a negative 3.8% this year. World Bank is projecting negative 3.2%. So there is consensus that this year our growth is actually in the negative territory. When economic growth is in the negative territory, maybe to a layman terms, it means that in real terms, even your income in terms of household or per individuals is actually falling in real terms. So that's what the Foreign Affairs Minister is saying, that through these policy measures that we are implementing as a government, trying to consolidate our fiscal position, trying to rebalance our trade position, trying to reduce our external debt, trying to also to reduce our domestic debt. That's what will happen in the economy. So let us brace ourselves up for more hardships.
Although the finance minister has hinted on lifting a tax burden on his interim budget on the 31st, let's see how the story develops. We have to move on to our next story, which is the report that's coming in from the International Monetary Fund. Interesting development there. Of course, I just explained the stats just shortly. Would you want to shed more light in terms of the stats that have just been presented by the IMF?
If you look at the IMF, actually, revised downwards its economic growth projections for 2019 as well as for 2020 by 0.1 percentage points from its April 2019 projections. IMF normally assesses the health of the global economy on a quarterly basis. So this is actually its July update where it's looking at the health of the global economy. What has prompted the downward revision of growth of the global economic growth is actually to do with escalating geopolitical tensions, especially on the oil producers. Then you also look at the trade wars between the US and China, where the US actually imposed certain tariffs for certain products from China. Then China retaliated by also imposing a higher tariffs on other US products. We have also seen continued uncertainties over the path to which Britain will take over that the Brexit and also the EU. We have also seen the US actually trying to renegotiate its terms of trade with other members, including your Canada, your EU, and other free trade zones. So all those things, they hit your outlook, they hit global economic growth. Global economic growth actually is sustained or is actually helped by continued or more continued globalization or more agreement in terms of what I may say, the consensus between all the players or all the global players of the benefits of globalization. But we have seen over the past couple of years the rise in terms of radicalism, where we are seeing the rise more and more countries trying to implement more protectionism in terms of their policies. Most of the countries, including the US, you look at Japan, you look at the UK, where Boris Johnson has actually been confirmed the new prime minister, is actually pushing towards more inward-looking policies. All those inward-looking policies, they hurt international trade. So when international trade is suffered, it actually has an impact of further, slowing growth. But
now that's on a global scale. Sub-Saharan Africa, growth of 3.4% in 2019 and growth of 3.6% in 2020. How important are these figures?
If you look at even for sub-Saharan Africa, that also downward revision by 0.1 percentage points actually speaks to what the IMF has been actually raised concerns over the global economic outlook. Sub-Saharan Africa is part of the global economy, and its growth is also centered on the health of the global economy. But if you look at Sub-Saharan Africa, Angola, Nigeria, and other oil producers, they have been cushioned by this recent rise in oil prices, and we have seen actually Nigeria coming out from a recession, which has helped to push up Sub-Saharan Africa economic growth. But that growth is actually being weighed down by the continued slow growth of Africa's most advanced economy, which is your South Africa. If you look at South Africa, it's been affected by a decreased power production, which is actually an issue in South Africa there, then low confidence level, and also uncertainty over the issues to do with property rights, which is actually emanating from your land reform issues. So all those things, they have actually contributed to the slow growth of South Africa on a quarterly basis. If you look at on a quarter-to-quarter figures, in Q1 this year, South Africa growth actually slowed when compared to Q4 last year. So all those things, there's actually no contributor to this downward revision of Sub-Saharan Africa growth.
And lastly, Boris Johnson set to take over as Prime Minister of the UK. Your comments?
Look, to me, it's I would want to say maybe congratulations to Boris Johnson for that, but the rise in radicalism and also the rise, in terms of populism and all those policy shifts is something that is worrying, especially to the health of the global economy. You look at even what we were saying about the IMF's economic growth projections. IMF actually said that 2020 projection of 3.5% growth, global economic growth, is actually precarious. Why? Because of this rise in terms of radicalism, as well as policies tending towards more inward looking. But I think Boris Johnson might find a way to negotiate, maybe to have a deal with the EU, such that you would avoid a hard Brexit. A hard Brexit actually would be would not be beneficial to anyone. It would hurt even the global economy, the UK as well as the EU. I think by the 31st, like what he said, I think maybe you would have find a common ground with the European Union. Then moving on, maybe to a key development here in Africa, where even Kenya is actually building, the largest wind power plant in Africa. This is something that I would say, positive news for Africa. We have seen, more people who are actually, climate concerned. They have been pushing towards having, sources of power that are more environmentally friendly. So you look at this wind-powered electricity that will be generated, in Kenya, which is about what
310 megawatts.
310 megawatts.
At an investment of $750 million US.
Yes, I think it's something positive. And you have seen President Uhuru Kenyatta there has actually been, focusing more on investing in infrastructure, especially electricity generation. You look at Kenya; it's a country where its industries are being charged something around $15 cents per kilowatt hours. So you look at there and you compare it with the likes of Ethiopia, where electricity costs about 3 cents per kilowatt hour. Then you look at Egypt, it's about 6 cents per kilowatt hour. South Africa is 9 cents per kilowatt hour. Electricity is a key ingredient in terms of production, and investing in electricity generation would have, a competitive, will help your industries to become more and more competitive. I think that one is it's a huge and a positive development there. And I hope also, over the past few weeks, the AU actually had they had a meeting over, the Grand Inga Dam, that ambitious project where DRC, in partnership with South Africa, Botswana, Namibia, and the World Bank, wanted, to invest $80 billion to construct about 40 to construct a dam that would produce about 40,000 megawatts of electricity, which is actually enough to power almost half of this continent. I think, the revival of that project will be key, especially in all key African markets. You look at what's happening, or the developments in Africa currently, where all of the African states are working towards having, a continental free trade area. One of the key things is to invest in infrastructure, and I think the revival of that plan would be actually, positive for the economy.
I realize. Well, thank you, Tinashe, for the perspectives. Thank you, viewers, for staying with us. Up next is a look at the stock market and market daily. Don't go anywhere.
Good evening, ladies and gentlemen. Welcome to Markets Daily on Equity Access. My name is Anis Chimbungu, and joining me today is Respect Gwenzi. And quickly, before we get into the markets of today, I just want to apologize to my viewers for yesterday's show. We did have a technical difficulty and did give you a little bit of spurious figures there. But today, with respect, we'll have a very much more vibrant show today. Now, as we just quickly get into this, the market has recovered from its trend of losses for about two sessions running, with the top 10 index coming out to be very much stable today after quite some time. Now, I'd like to suggest probably that's in cassava's weight pretty much dragged it down because it would have made sense for that index to go up, since Econet, Old Mutual, and Padenga all were in the green, but then only cassava was in the red out of all the 10 counters within that index. Where do you think that investors are really looking to go at the current moment? Because we have noticed that the market has been heavily oscillated ever since the scraping of the multi-currency regime, where SI 142 was also introduced. Now investors seem to be very much skeptical about as to which direction to take.
Yeah, sure. So there was an initial panic, which we also, after the promulgation of SI 142 of 2019, which obviously scrapped the multi-currency regime. So the immediate reaction from investors was such that there was an anticipation that there could be a stabilization of the local currency pursuant to government's additional measures, which were meant to buttress the value of that of the new currency. But that was only an imagination, because the immediate thinking was that there could be increased flows on the interbank, and once flows would start to improve, then the market might gradually move towards stabilization at a rate which is possibly closer to the fundamentally implied rate, which is something just close to 8 and below thereabout. But then I think the mess around the interbank is what has led us to a point where investors are also in that, I mean, they're back into that mode where they feel that the market might not return to stability anytime soon. The market is also widely agreed in terms of how they view what's happening around the interbank. It seems like banks are accumulating flows from the public, but there's no pure circulation or exchange of flows on that respective market, and this would definitely mean that there would be excess demand at any given time. And if there is excess demand and a jammed supply somewhere, then it means the price might actually keep on pushing up. And if you look at the obtaining rates at the moment, both the interbank as well as the black market rate, they're actually showing further upward pressure. And to investors, what that would mean is that if you're holding your cash as as unhedged position, it would mean that as the exchange rate goes up, your value is being eroded. So stocks have come back to become that preferred hedge, or that preferred safe haven again. Over the past 2 weeks, stocks have accumulated about 5% thereabout, 2 from last week and the other from the past week. Although there has been past 2 days we have seen the market coming off, but I think if you're looking on it, if you're looking at a larger scale, 1 week to 2 weeks, we're seeing the market really tracing upwards, but the growth has really been moderate. Yeah, and it came after that initial decline. So your question really was, where do you think, what do you think is the perception of the investors, and where do you think the market is going? Everything falls around what investors are envisaging to be happening on the interbank, and whether this would lead to stabilization of the exchange rate, and of course by implication other investment classes such as stocks. So my own thinking is that we might not see the stabilization that we had hoped for. I'm one of the people that initially projected that there could be a stabilization, but this was under the impression that RBZ would let market forces come to play. There's a lot of grip from government that is quite visible in the market right now. Government is interested to protect. If you see how subsidies are being extended to certain industries or certain sectors of the market, notably the fuel sector and also agric, it's quite clear that government has an interest in terms of the exchange rate, obtaining exchange rate at any given moment, and this would definitely mean they would play a hand in the market. So I don't see the stabilization coming anytime soon, and I don't see stocks really coming off significantly.
All right. All share index added 0.27% to its prior session level for it to settle at 191.91 points. Industrials index up 0.19%. Now, mining's index did add about 5.03%, much to the beat of BNC having added about 19%. We'll touch on that a little bit later. But then you did mention that on a week-to-date basis, on a weekly basis, we have been realizing gains. One of which I would like to just highlight there, where we have been seeing a trend of volumes that have been very much heavily suppressed, but then whenever volumes do go up, they do hit almost above 10 million shares a day, and then in the precarrying sessions after that, we realized that a lot of trading would have pretty much been subdued. So which comes to my line of thought, and to suggest probably that there's a lot of bidding happening and not a lot of selling that has been happening on the market.
Yeah.
Would you agree with that notion there? Shortly before you do, 0.05 down on the 5-day trend for the industrial index, 0.65% on the top 10 index, and 0.04% for the for the all share index there. It seems as if we've just hit a technical glitch there again. Well, then we'll just have to use our own mental strength. Now, there were about 20 counters that exchanged hands today, down from 26 in the prior session, while we also experienced that within those 20 counters, 8 were winners, while only 4 counters did come off. One of which to note, like I did mention, was Bindura Nickel that did add 19% to its share value for it to settle about 10 cents. Now, what percentage of perception would be coming from investors in terms of pushing that share value up? That is coming from the notion that Bindura Nickel is scheduled to release their financial results by the end of the week, actually on Tuesday the 30th of this month.
So I think for Bindura, if you are closely following, you would realize that BNC has really not repriced against against the macro fundamentals. When you look at other counters, they've closely trailed, they've closely followed developments on the exchange rate side. Bindura is a company which mines nickel. That's the key. That's the product that they do mine, and exclusively 100% of the product is exported to international markets. And therefore, I would expect that in terms of the switch between the USD to the RTGS dollar, they were supposed to be the equivalent repricing in terms of its per share price in a way. And Bindura has barely moved from an average price of about 5 cents. It's now sitting at about 8, whereas the exchange rate has fallen by over 900% thereabout. So I think if you're using a basic statistic of saying the exchange rate has worsened at 1:10, a mere price of 5 cents could have given you a price of probably 50 cents right now. But what you see right there is just about 10 cents. Over the last couple of months, it reached a high of about 13 cents before retracing backwards to about 8 cents. So ahead of the results, definitely there are people who follow the market and they know what's about to come. Despite that, the net profits might actually be lower than the comparable period last year. There is still significant upside in BNC, and that's what other players are trying to factor in this whole matrix by obviously pushing the price up. But the price of 10 cents leaves Bindura with a significant upside, and we might see the pure fair value going upwards, even north of 20 cents. But I think my interest really is on Econet. It went up today, but then over the weekend we saw what happened, and now there is a shift in strategy. The company now says, against the power challenges that we are facing, we might likely respond in a way if government fails to address certain aspects such as power availability. What do you think that strategy entails? Because to me, it seems that they hold a significant leverage. If you are moving 80% of all the transactions in terms of volume on your platform, it means you are of national importance, and therefore that's the company's leverage. But then at the same time, they're expected to provide a service which is on the voice side, and they're expected to have their network up to ensure that at least 60 or 70% of the all the the overall population who utilizes their service are up, including the government itself. I think that's where the problem is.
I think for me it's a little bit worrying. They may be playing a hardball in a sense, because I would like to think of Econet in the sense that within their sister company, or rather their spin-off Cassava Smart Tech, they have a subsidiary that's called DPA. DPA has managed to come up with about 20 to 25 solar plantations that do generate almost about 3 megawatts to 7 megawatts at max for each of these solar stations. What do you think would be their trade-off there in terms of them actually using ZESA produced electricity versus them actually just using their own solar stations, as opposed to them just keeping their customers in a good space?
But you have to understand that solar investments, they are quite decentralized. Of course, the Harare plant can easily be up on solar, but the matrix is quite simple. You have an alternative, which is ZESA, which is selling electricity at a suboptimal price, and you have you have the right to utilize that alternative. And you have solar, which you're producing, but you know that the net price or the net cost is upwards of what you might pay for the alternative. So on the net, you would rather go for the latter. So I think this is what the matrix looks like, to say if we utilize our own, then there might be an additional cost.
All right. On the other end of the yardstick, NAMPAC, which is heavily related to Delta, Delta does heavily rely on NAMPAC in terms of packaging for their products, and they did mention that they suffered an almost 50% decline in volumes. Surely that does affect what NAMPAC also should attain within their first quarter, if we had to say, or within the same time period. Do you think that it is going to be a very suppressed year in terms of volumes, even also for their revenues? Come financial full year, I mean, especially considering that our foreign minister did mention that we are still in these hardships for the next 3 years.
For NAMPAC, my take would be that they might realize a slowdown in terms of their numbers, in terms of volumes. Why? Because a significant portion of their business, of course, comes from Delta. But Delta has been experiencing a decline in demand across its product portfolio. And therefore, there might be that impact as well. Secondly, there's still forex challenges that are still being experienced in the economy. And therefore, it might obviously as well end up affecting, it might also end up affecting NAMPAC. But then on the tobacco side, numbers are looking good. There's been growth in terms of volumes, and
almost matching last year.
So they might really see better fortunes.
All right, NAMPAC then settled at 39 cents after having let go of about 2.01% to its share value. TSL, which is also up 16.67% for the set of rises to curve, with Simplo Meikles and ZPI having added 12.5, 0.72 and 0.4% to its share values. Now, interbank rate has continued on its very slow weakening pace. On a day-on-day basis, has been coming off about 0.15%. Today it closed off at 8.9, while the parallel market continues to weaken at a much faster rate at 9.9, which is pretty much similar to prior SI 142. There's such kind of a trend between these two what you call aggregates. Now the gap is beginning to widen there, with some traders within the parallel markets trading in the 10s today. Also some having traded around about 11. Old mutual implied rate at 10.27 today. Your thoughts around that?
Yeah, I think like I said, on the stock market segment, there might be further losses, or there might be further weakening of the exchange rate if things are not done well in terms of how trades are being conducted on the interbank side. I think the trend will largely follow transparency, to largely follow as well the flows of trades on that respective market. And at the present moment, it doesn't seem like we're heading in the right direction.
Okay. Well, until we have a much more stable foreign currency exchange rate, fuel queues are still going to be there until your fuel providers do actually reach a much more consensual price of around about 12 bond per to the liter. Now, just as a highlight, Foreign Minister did mention that we are still going to be in such hardships for the next 3 years. Are we ready for such? Now, don't forget to like, follow, and subscribe our YouTube, Twitter, and Facebook accounts at Equity Access, and do visit our website www.equityaccess.net. Good evening.
Climbing to the top takes more than just hard work and smart choices. It's the passion that drives you from within, the endurance to keep going through difficult times, and having a very clear vision of how to succeed. That's what we strive for at CBZ. We're a diversified and innovative listed financial services group in Zimbabwe with a complete range of activities including banking, short and long-term insurance, asset management, and property investments. CBZ has been a pinnacle for stability in the economic landscape of Zimbabwe, stemming from our deep-rooted values, our excellent customer service delivery, and our corporate vision to strive for excellence as a global competitor. Our continuous investment in research and development will cement our promise to provide customer convenience utilizing state-of-the-art technology. Relationships are at the core of what we do. We understand, however, that strong, long-lasting partnerships are not built overnight. With over 3 decades of wealth management, we have come to understand our clients and their specific investment requirements. Our unique mix of skills ensures that investment opportunities are examined from all perspectives. The balancing rocks of Zimbabwe have weathered the elements for thousands of years and stood the test of time, like majestic reminders of the fine balance of nature. They challenge our perception of what is possible and what endures. Just as CBZ has weathered the economic storms and remained steadfast throughout the turbulence of unsettled economies. Achieving the impossible through resilience and stability, we balance the elements of hard work, dedication, and experience, making us your ideal partner for success.